Hey there, YouTube and our Facebook family. We are excited to bring to you guys this show specifically because you know what? It's what everyone's talking about right now is interest rates, right? The interest rate has gone up, and you know what? I'm scared to get into a high interest rate. So I have here Juan Aguirre with Americana Home Loans. How are you?
Good night, everybody.
So we're going to be talking about interest rates today and really talking about options so that you can understand, how to just get through that fear and really move forward and purchase your first home, especially if you're currently renting right now. We're going to say it. I specifically would recommend that you buy, because if you're ready today, you have a job, you have credit, you have your, saved up money to make in order to make this purchase possible. You don't want to hold off on it because the rate is too high. And today, hopefully, we're going to give you some options so you can go ahead and move forward and buy this property and stop renting. Renting is throwing your money away, I promise you. So if you like numbers and the interest rate is what's absolutely getting to you and you're not happy with it, I promise that if you do the numbers when you're renting, you're going to be much more unhappy. So Juan, let me know, so when someone's ready right now and they stop the purchasing process because the rate, they don't like the rate, everything else is there, they have their credit, they have their job, they have, their savings, and they stop it because of credit, what do you want to say to them and what do you suggest?
Well, and you know me, Nora, I don't like to, throw, pressure points or, big topics as far as, we can.
Yeah, we're live. Just so you know, we're completely live. So okay. I'll say the following, my friends. It's very difficult to get him on a video because he's really good off camera. He'll talk and he'll really go through. But on camera, it is quite the stress to get him in here.
And it's actually we just did a Spanish version of this, so we're getting our language a little mixed up.
And this is what you said.
I said I can talk a lot faster.
I can talk a lot faster because he was
in
very
English,
slow.
Yeah.
In the Spanish.
Yeah.
But you said you can talk a lot
faster. Okay, yeah, absolutely. So no, pretty much what I would say, to your question, or going back to your question. So to the people that are, their big hang up is interest rates, right? So, I mean, we don't like to pressure anybody into moving forward or saying like, hey, you should buy just because, we want to sell. That's not the strategy. I would say, like Nora says, for the people that are there and, they're pretty much, 50-50, and they're listening to a bunch of stuff, interest rates are going to go down, houses are going to go down. I would say it's very difficult to predict that. And they've been saying, since the half of last year, prices are gonna go down. We've had a pullback, but they're holding up. They're holding up, and my opinion is I don't think the market's gonna drastically go in one direction or another. Probably interest rates and house prices are gonna move in line. So what I would say to the people that are in that specific situation is, it's just a matter of finding, other strategies, right? To help out with that payment, or to get into maybe a slightly lower payment where you feel comfortable, right? So most mortgages right now are being structured with buying down the rate. There's also other strategies out there like buy downs for the first couple of years, or even up to 3 years. So there's definitely.
So let me interrupt. Let's talk about buying points, because I think that's something that's been utilized quite a bit in the last couple of years. And so buying down points, my friends, is an option that you all have when you're purchasing. But it's also, I believe it. I think you can break it down to three parts. It might be a good idea. It might make sense. There might be a side where it really doesn't make sense in your scenario to do a buy down. And then there's the last one where it's an absolute need, like you need to buy down points because of maybe the conflict or maybe the income or, the debts that you have come into play, right? So tell us a little bit about the buy down and, the buying points, excuse me.
Yeah, right now. So in most cases right now, it's going to be necessary and it's going to be important to buy down the rate, especially, right now how the market is. And it might not be, every market, every price point, but we're seeing that definitely sellers are giving a lot of money towards buyer closing cost.
Yeah.
So right now it makes a lot of sense to buy down the rate, especially if you if you can buy down the rate with basically with using maybe the seller's money or somebody else's money and not yours, right? Not have to come out of pocket to
do
get a
buy
better
downs.
to get a better interest rate.
And in this scenario, when we're talking about the seller paying, this means that your real estate agent would pretty much in the negotiation process of the house that you're buying, we could hopefully negotiate, the seller to pay some closing costs. And right now we were talking about that we're seeing the market where yes, sellers are helping with closing costs, and that opens up a lot of opportunity to do buy downs and possibly, talk about the rate that you were the last interest rates that you saw this week for people, so they get an idea.
This situation, I think, a little bit, definitely not the norm, but it's not too far away from it either. So we recently had a transaction where it was kind of necessary to buy down the rate quite a bit.
Yeah.
We were in the low fives, I think like a 5.1, and it took a lot of. It was a big buy down, but fortunately, our customer didn't really come out of pocket for that expense.
With buy downs. Mm-hmm.
So it was a good situation for them. And right now the rates are in the sixes. 5.1 is definitely a huge improvement, right?
Yeah, absolutely. So buying points is one major way. And again, my friends, many of you guys, like you said, Juan, right now, it's highly suggested, possibly in every scenario right now, you're going to be seeing that folks are buying down points. So that's a great option. And right now we're having sellers help. So again, that's why we're saying that the market right now is in a good place for you, because you are getting some help, right? You're not, the burden doesn't just fall on you. You have the help. You have a lot of sellers willing to participate, which is nice, right?
Yeah, there's definitely different places where we can pull a little bit of funds to help the buyers buy down the points. Even if having to offer a bank credit or something along those lines, it's
absolutely
definitely stuff
if a lot of the pieces are there, right? A lot of the pieces are already there. There's a lot of everyone's willing to jump in and support. So now let's talk about a little bit about the buy down. You mentioned the buy down, just a little bit about the years. It's a couple of years, so let us know a little bit about that one.
So a lot of there's a so I think the term right now that's getting a little bit popular is they're calling it a inflation buster program. So pretty much what it does, the most common one is the 2-1 or the 1-1, which means pretty much you get a better interest rate for the first year or a better interest rate for 2 years. It's not the arms, Nora. It's not the 3-1 arm or the 5-1 arm where the interest rate changes after that time. It just goes to the interest rate that you were going to get initially. It's just that, I guess it's kind of like an introduction interest rate for 1 year or 2 years or even up to 3 years. So a lot of banks right now are offering that right now. Interest rates maybe in the high fours. And then after that time period, your rate pretty much goes to whatever it is that you were going to get. So.
Yeah. So you get a break. You get a 12-month break, 24-month break, which is nice, right?
Yeah.
So again, there's options.
Yeah,
right?
the idea behind that is obviously to understand what that payment is going to be for the long period of time, not to just go into it thinking that because there might not be an exit strategy in 1 or 2 or 3 years. You might have to hold out longer than that. So the idea is to be comfortable with the end payment with that program is my opinion.
Absolutely. No, I agree. I think that at the end of the day, what we want to see you do is purchase your home and really be set up for success. And it's important just to budget, right, properly. And so, you're going to get an attractive possible interest rate for a couple of years, but it's so important to just program yourself for that other payment, right, that you're gonna get, because time flies, right? It just flies, right? So when we're talking about interest rates, then Juan, is there anything else that you want to share with folks as far as what they're able to kind of do as far as options to kind of offset this, higher interest rate? Although I'll be honest with you, we've talked about this off camera, is necessarily what we're seeing right now is not necessarily that it's a high rate. It's actually more around the normal, right? What we had seen is
Historically,
low rates.
historically speaking.
Yeah.
But it's difficult right now because it's not just the interest rate right now.
Yeah.
Obviously, there's inflation, there's a lot of stuff going on with the marketplace. But like Nora says, if you're in that position where you've been waiting to buy, you need to buy, or just something where it makes sense now because
Yeah.
you're in a position to buy, and the only thing holding you back is the interest rate. What we say is, right now it's just a matter of negotiating and maybe structuring your purchase to where it does make sense.
Yeah.
And I think that's what we have to do during this period, right?
Absolutely, absolutely. I mean, the idea here is giving you options so that when you are ready to purchase, you don't just freeze and say, "Oh, rates are too high. I'm not going to buy right now." Because the truth is, nobody has the actual time frame that rates are going to be low, right? Nobody has a time frame of, well, when rates get low, what's going to happen? Then the demand is going to be really strong. So now you're going to get great interest rate, but you're going to be competing against everybody in the market for a home, and now you have to come out of pocket a lot more cash. So it almost, in a lot of ways, it kind of offsets itself, right?
Yeah. Plus, I mean,
Yeah.
if you think about it this way, if you're in the mindset that the interest rates are going to get better, like Nora says, for sure, especially in markets like Las Vegas, that even though, the demand fell back a lot,
Yeah.
our inventory is still very low. There's not a whole lot of inventory. When something goes on the market that's a good price, it flies. It
Yeah.
flies off the market, right? And so
It's still today. It's still today, right?
there would have to be a lot of things that would happen so that the market turns into a situation where there's an abundance of listings and you don't have to compete against other buyers. So obviously, interest rates go down. It's almost a sure thing that the market's going to have that competition all over again, and it's
Swamped.
going to make it a little bit more difficult.
Yeah.
Plus, if you're in that mindset that the interest rates are, might be a good idea to lock in the house now.
Mm-hmm.
You always refinance if the interest rate goes down.
Yeah. The interest rate can go
You
down.
just trade it.
Right. The interest rate can go down, Juan, for refis, is my understanding. But also, what can happen is, the years pass, so now you basically have attacked your debt, by making those payments. So maybe 5 years pass, maybe 7 years pass, you've attacked that debt. Now you're able to come in remove, right, what's called mortgage insurance, and now you're able to refinance for double, right, the purpose, possibly, and the benefit, meaning you're going to lock down a better rate than what you had, and you're going to be removing mortgage insurance. So refinancement is also a huge option in the future to restructure your loan, right? So many of you guys feel like, okay, this is 30 years, oh my gosh. Well, it's not necessarily the truth. And, statistics show nationwide that most of us, usually end up staying in the home where we buy maybe 6 years, and that's probably pushing it because a lot of other places say that it's closer to 5 years. What does that mean? That most of us will end up buying another house, maybe selling that one, outgrowing the
Or
one.
just
usually-
refinancing
Yeah,
it.
or we're just refinancing. So at the end of the day, you might not see that interest rate for that long. So now the best part, and I keep on telling you that if you do the math and you're renting right now, which many of you are, because we know the numbers here locally here in Las Vegas, right around 50% homeowners, 50% renters. So we know there's still quite a bit of you guys out there renting. And so what am I going to tell you? Basically, if you do the numbers and you're interested in the high interest rate, I can promise you that as a renter, you're paying tremendous interest because zero of that rent that you're paying is going to go towards anything. It is going to go towards something. It's going to go towards the landlord, right? The landlord has all the benefits. And so you as a renter have zero benefits from that rent, right? So that's the reason why I'm so passionate about letting you
And another
buy.
important thing, the rent demand is still there. So it's very, it's kind of also difficult to think that, rents are going to come down. So, if rents don't come down, then, obviously getting into a mortgage is not necessarily such a bad thing is if rents are going to stay high, or even if if they come down a little bit, but they have already increased quite a bit. So definitely the affordability of housing in the near future doesn't seem like it's going to drop off very much.
Correct. So at the end of the day, what we want to tell you is move forward. What I want to tell you is move forward, purchase your property, stop renting, stop throwing that money away. Just put all the pieces together so that you can, get to that, the finish line and get the keys to your house. I know that the rate might not be the best. All of us wish we would have gotten a 2%, times 10 houses, right? But that's part of, that's part of the cycles in real estate, and it's normal. Just stop renting, get out there, become a homeowner. And those of you, I know, we want to touch really quickly on investors. Those of you that are investors, we're seeing that there's a lot of options for investors as far as interest rates as well. And we're seeing a lot of investors really pay a lot of attention to what's happening in the market and really go in and purchase, right? So if you're out there and you're an investor and you think that maybe, or you wanted to become an investor because maybe you've saved some money up and you were thinking, well, this is not the right, pay attention to the market, look at your numbers, and you might find a deal that makes sense to you. Like many of the folks that we're seeing right now here in Vegas, the numbers make sense to them, right?
Yeah, something that a lot of people are paying attention to right now is, single family rentals, because what they're doing is pretty much, splitting the property apart and renting out each room. So, even though the mortgage on that property is a lot higher, but they can also get a lot more rent than just renting it out, to one person. So,
Right.
There's definitely a lot of things out there. It's just, we're in a different market, different environment than we were a couple of years back. So it's just, people don't stop buying houses, they don't stop investing. It's just a matter of just looking at it from a different point of view, and getting into deals or getting into a property where it makes sense for them, right? So that's the only thing that you have to, in my opinion, that you have to pay attention to and be comfortable with what you're getting into. And it might not have been the best deal of the that you're gonna let's just say in the next 20 to 30 years, as whether you're buying a house for the first time or you're doing your first investment, but it doesn't have to be the last either. Now, if you keep on renting or you don't get into the space, it just it's what we see from people, right?
Yeah.
Getting started later in their life, it just the difficulty doesn't necessarily get better. It typically just adds more, right, to that situation of getting into the market, right?
Correct, absolutely. So again, we are grateful that you're with us here. We're excited about creating a lot more content, a lot more videos for you all in English, because I feel like many times we are creating content in Spanish, but we are going to be focused, dedicated. 2023 is a year where we're going to be sharing a lot, especially on YouTube. So those of you that follow, please, subscribe or hit the button where you can get notifications every time we have a new video. We're always trying to give you information real time, what's happening in the market today. Specifically here to Nevada, we will bring you some experts from other markets throughout the year. So please, stay in touch. Let us know if you have questions as well. We're very excited to answer those questions and really help you and guide you so that you can become a homeowner, or even more exciting, become an investor, right? So I hope you come and join me for some more investment videos, Juan.
Sure.
Hopefully it wasn't terrible for you.
It wasn't that horrible.
Just the fact that he started with, are we live? Could we start all over?
Yeah. So, the only thing I get as a lender, I get asked this question a lot. Like, hey, what are the interest rates now? And it's kind of sometimes it's a difficult question to answer, because I don't like to just throw numbers out there. Just say, hey, the interest rates are this, because every situation is going to be different, right? Especially with what we talked about, which is buying down the rate, right? So that gets factored into most deals now, right? But just wanted to share this with you for people that do have that are thinking like, hey, where are the interest rates now? So I think the interest rates peaked in October, November of last year, and they were, the national average was in the sevens, right? They kind of drew back a little bit, and now they're in the sixes as of end of December in January this month, we're now in the sixes, and this is, we're talking about the national average, and obviously, factoring a lot of different scenarios into that average. So just this, thought I'd share that with you, and
Well, thank you.
I hope to
Yeah.
participate a little bit more so I can get good at this, right?
Yeah, no, again, my friends, also very important, disclaimer, I love real estate, and, I've been doing this for 17 years. It's going to be 18 years, actually, tomorrow. Oh, my gosh, tomorrow. The 31st, it's going to be 18 years in real estate. So I know it. I live it. It's very important to me, and I've dedicated, a good portion of my life to making sure that I'm up to speed on it. And I know Juan's been doing it for a very long time as well. But guess what we haven't been doing for a very long time? This whole, being on camera, having the lighting, like having all this, but we're excited and we're passionate about giving the information to you. So we're working on it. We're gonna be getting better and better as time passes, so that we are able to share, our knowledge with all of you, right? And make it really simple for you guys. So you guys can just get a little video and stay on top of everything that's happening. So thank you for your patience. Ask a lot of questions. We hope to see you here around in our channel. Have a wonderful night. Thank
Good
you,
night.
Juan, again.